Happy Tuesday, everybody. This is Rob Reinhold. This is the Market Roundup, and we had a pretty wild day today. Let's jump into it. In this session, we're going to be talking about the news of the day. We did get the PPI report that definitely caused some movement. Ultimately, we didn't go anywhere, so we're going to take a look at all the markets, rescore everything, and then I've got one bull and two bears for you.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, let's look at the final numbers. And I really want to show you that today we started the day positive, we went into the negative, and then we ended up virtually flat for the day. So the Dow was up 0.5%, S&P basically flat, the Qs, big recovery off the bottom of about 0.6, 0.7%. The Russell stayed strong all day long, and we had oil and gold up. And I really want to focus on this right here, the advanced decline line. Take a look at that. That is 2 stocks up for every 1 stock down. And then if you peek over here to the sector heat map, which we'll take a look at, you can see mostly green out there. Now, yes, we are still have a lot of stocks below the 50 MA, so it is not a bull market. But this was a much more bullish day than it looked like. And that was mostly because we got the PPI report that came in very, very tame. The expectations were for like 0.3. It came in at 0.2 for the headline number and 0 for the core. So 0%, no inflation on the core. The markets loved it. We popped up about 1% in the futures. And then we pretty much gave it all the way back and then went negative. And then at the end of the day, got a little bit of a rally. Overall, this was more of a disappointing day because we did get that gap up and it did not hold the gap up. And you can see on the chart, that's exactly what we got. We got that gap up and it did not hold. However, you can look at the long lower shadow. We did get a bounce off the bottom. This candle, I can't really say this is a bullish or bearish candle. It's both. You could look at this and say, hey, you know what? We came down, we bounced, we put in a bottom, and we got some defense of this long lower shadow here. There's buyers in the market, and that is true. We also got a gap up and had no buying and some serious selling during the day. Ultimately, I'm going to look at where we are here, and you can see we're right at that resistance level 2. Tomorrow we've got the CPI report. I don't want to read too much into this candle because tomorrow, I'm telling you, is either going to be a big up candle or a big down candle. I do not know which one it's going to be. I do know that these things typically follow trends because the market does have a mood, and right now the trend is more down than up. So if I had to put odds on it, I'd say 60-40% to the downside off of the CPI report. Look, I have no idea what the number is. No one does. Well, probably someone does, but you can't trade off that information. I think you just really have to wait and see for tomorrow. But as I said earlier, the market has a mood, and we call this sentiment. And what we've seen lately is there's been more selling than buying lately. And really what I mean by that is we've had a lot of rallies fade, but you can see the bears aren't in total control because we have long lower shadows out there. There are days where the buyers do come in. Long lower shadows on a lot of candles. The problem is we also have a lot of long upper shadows on a lot of these candles. I'm going to say it's definitely a little bit more bearish than bullish, but I don't think you can say definitively at this point where the market is really trending. I still think we're at just leaning slightly bearish, but the economy's still good. And as I said in the trading room, I'm looking to be short-term bearish on pretty much everything here. I'm not going out more than a week or two. Tops. That is tops. I'm very happy to play the bearish side when it's showing me bearish, but I'm not thinking this is going to last all that long. And if we jump over to the Qs, this is where we actually see a little bit more selling. And we're going to see that in the heat map here in just a second. But it's been a little bit worse here. This candle is not as good as the S&P candle today. That's a pretty disappointing candle where we gapped up and lost all the gain and actually went negative for the day. So it's not a great candle, but again, tomorrow's going to be a big green candle up, or it's going to be a big fat red candle down. Whichever one it is definitely going to tell us where we need to be as far as our market weighting. So let's just really talk about that real quick. Let's say we get a big up candle and we recover to where we're within the range of the 2 moving averages. Okay, that simply moves us to a 0. Simply moves us to, okay, we're probably more neutral than bearish, but we're definitely not bullish. Let's say there's a big red candle to the downside. All of a sudden, that is confirmation that, hey, we need to get a little bit more bearish. We are at a -1. Let's go ahead and get to a -2, or maybe even a -3, because it's likely going to get a little bit worse. Here's the heat map, and I want you to just take a look at this. The selling was really just in the Mag 7. And this is the problem with where the market is now. Remember, 31% of the S&P are these 7 stocks. When all 7 of them go down, it's very, very difficult to look at the S&P and say like, oh, that was a really good day. But take a look at this. This is a good day. Software had a great day in technology. Financials had a wonderful day. I mean, take a look at industrials, real estate, utilities, basic materials, energy, all had a great day. So look, I definitely don't want to see anyone get too bearish out here, because there are signs that you should not be super bearish. I know the market looks like it's breaking down, and if we get confirmation off that CPI, okay, let's get a little bit more bearish. But until then, I've been at like a -1, -1.5, where I'm just a little bit bearish, and all my bears are very short term in nature, like 1 to 2 weeks out tops. Because I do think that even if we do get this big nasty sell-off, we might tumble all the way down to 5,700. That would be another 2.5% down. That could absolutely happen. But as long as the economy is doing okay, which again, a hot CPI is actually going to be a sign that, hey, the economy is actually heating up a little bit too much. All it's going to mean is, okay, the Fed's not as aggressive. But when it comes to stocks and earnings, that's actually really good news. Look, I know no one likes inflation here, but higher inflation typically means higher profits for companies, which means higher stock prices. Let's jump into a couple trades, and we'll take a look and see what looks decent here. Taking a look at the bulls here, I still like some of the energy stuff. I talked last week about AR and Frontline. These all look great. I think you can stick with them. There's some good looking stuff here. I think this is an interesting play, this Walgreen Boots Alliance. We talked about the January effect, where the worst stocks of last year tend to get a bid. And they just had their earnings report, and they've had a big jump, but there's buyers afterwards. So I think that was interesting. But the one I like the best here is a stock called Maple Bear. Now, the symbol is CART. It's Instacart. For any of you that order groceries online, Instacart is one of the companies that will deliver it to your house. And you can see that it is held in quite nicely. And you can see today, it didn't really care about the bearishness in the market. We actually had a nice day to the upside. There's going to be some big resistance up here at 48.50 to 49, somewhere in there. So don't have a big lofty target. I think you can absolutely look at something like a 45.50 bull call spread. Maybe you're going to have to go out to February. Or you can look at something a little bit closer to that. But I do like this one to the upside. It seems to be pretty much ignoring the market weakness here and breaking out on a day like today. Then there's also some good bears. So I found great bulls, and I also found great bears. So I again, it's not telling me which way the market's going to break. A lot of times, if I'm unsure of where the market's going to break, I go out and I can't find any bulls and I find a ton of bears. Then I start to think, okay, it's most likely going to break lower, and vice versa. I think we're finding good trades on both sides, so it's not really giving me a signal. So on the short side, I like NVO, Novo Nordisk. Now they had a news, they're one of the GLP-1 drug makers that do the weight loss drugs. And they had a new drug that did not show very good efficiency. That was in a phase 3 trial. That's what that gap down was for. And then you can see it did not get really any buying whatsoever. And then today, Eli Lilly adjusted their numbers down on their weight loss drugs lower. So this whole area is actually not doing well in the market. And you can see we're now dropping below that low of 82 that we set on that big nasty gap day. That's telling you it's likely to go lower. This one's got a ton of options available, tons of strikes, dollar strikes, so you can do anything. I mean, if you wanted to do an 80-82 bear call spread or bear put spread, that would be fine. It would cost you a dollar. Sorry, you get in about $1.10 credit if you did a bear call spread. Bear put spread, it would cost you 90 cents with the $1.10 upside. You could go down to 78. I like this one all the way down to 75. And if the market is bearish tomorrow, I think that's going to really help push all the stocks down. So if you want to get super aggressive, I think all the way down to 75 as a target would be your play. Something like a 80-75 bear put spread. Next, we're going over to BEKE, KE Holdings. This is a Chinese real estate company. And there was just a huge band of support. And I'm just showing the last month or two. But if you go back on a longer term chart, there was a ton of support at 18 for years. And when it broke that, you can see that we're having a hard time. I love these kind of candles. Look at that. Gap ups, fall apart. Gap up, fall apart. I love this in a bear rally. Nothing tells me you're hunting in the right place when the thing falls and then every day it gaps up and loses its gain. When it finally does turn over, it's ready to go. It's not quite ready to go yet. Maybe it gets up into the 1750. But for me, I like to just to give myself enough time. I think a 16-17 bear put spread makes a lot of sense here. This is one of the few real estate stocks that has weekly options. So there's lots of choices for you here on this one. But I like the 16-17 probably going out to next Friday. Not this Friday, but next Friday. So giving yourself, about 8 or 9 days, keeping it short term. All it has to do is work its way below 16 before that. Let's talk about tomorrow. Tomorrow we got the CPI. I already talked about that. And we also have the official start of earnings season. Now, the first companies are always the banks. So we got JP Morgan, Wells Fargo, Goldman Sachs, BlackRock, Citigroup. So they're going to come out and start us off. So we have two things happening tomorrow morning. We have these bank earnings that are going to hit. And then we also have the CPI that's going to hit at 8:30. I'm expecting there to be at least a 1%. I think it's going to be bigger than 1%, but I think there's going to be at least a 1% gap up or gap down tomorrow based on the news. Which way that's going to go, I don't know. As I said, looking at the trend, it's slightly bearish, and I know that when the news comes out, the mood that the market is in matters. And what I mean by that is when the market's in a bad mood, when there's more selling than buying, and good news comes out, you get a short little bump, but then it falls apart, just like we got today. That's exactly what happened today. We got a gap up off the PPI, and they sold it off. When the market's in a good mood and the bad news comes out, you get a short-term spike down, but then people buy it anyway, and it goes right back up. Right now, there's a little bit more selling than buying. So if I, again, had to place bets, which that's what I do for a living, I think it's about 60-40 that we're going to get a move down tomorrow. But 40% is a huge percentage. So I think if you have some cash here, I think you wait till the end of the day, see where we close out, and then take positions accordingly. That is it for the Market Roundup. Thanks for joining me. Goodbye, everybody.